Gabe, thank you so much for joining us. Gabe is a vice president at Well Grounded Real Estate, operating in Toronto and also secondary markets across the GTA and broader Ontario region in commercial and multifamily. So, Gabe, first question, can you give us a little bit of a history of how COVID has impacted the commercial side? You know, in March, I think late March, they were ordered to kind of shut down non-essential businesses. Like, can you give us a little overview of what you've seen with the businesses that operate out of your properties?
Absolutely. Firstly, thanks a bunch for having me on, guys. So it was definitely mid-March, and once everything started to sort of ramp up and there was a lot more media attention, it became pretty clear that social distancing was gonna become regulated and come into effect. We had some tenants slowly start to reach out to us, and the key dates are always the first of the month. So we had some internal conversations. We expected it to happen. We started to put a framework in place. Tenants reached out to us, what was going to be our sort of criteria, how we're going to evaluate how we can help out first and foremost, because we certainly did expect it to happen, but there actually kind of was one particular tenant, a national tenant that was based out of Washington. And it seems like a long time ago now, but if you can kind of remember back then, Washington was one of the first major hotspots in the States. Actually, before New York, there was quite a major breakout. And so that tenant was the first that really sort of rang that alarm bell. They contacted us, major sense of urgency, and we were able to put together a deferral deal, which really sort of laid the groundwork for a lot of our future negotiations. But that happened very, very quickly. Within 3-4 days, they were just trying to really do as many as possible across their portfolio. And once that happened, it seemed like we started to receive more and more. But it was really sort of that, say, 10-day to 2-week period leading up to April 1st, where everything got kickstarted, and we started to receive several phone calls. And our portfolio is a nice mix of national AAA tenants and mom and pop shops, independent retailers. So we saw a real mix, but we had quite a bit reach out before April 1st.
And what are they? Quite a bit of national tenants or mom and pops or both? And what are they saying when they reach out? Because a lot of these national tenants, you would like to say, well, no, you're obligated to pay your rent. Pay your rent. Like, are they already saying, hey, it's been 2 weeks and we're broke? Like, what?
So, no, it's a great question, and to be honest, there was quite a divide, like quite a major difference in how they were approaching it. And I've had a lot of conversations, but it really seemed to depend on sort of their ownership structure and how they were set up. So as an example, I mean, you had a lot of the smaller independent retailers, as you would expect. I mean, it's their baby, especially if they're deemed non-essential. Conversations were very genuine. Hey, I have nothing coming in right now. We have to shut down. I'm very, very worried about my ability to pay rent. And I think under those, under those circumstances, you can really, all the cards are on the table. You're not trying to necessarily extract leverage, anything like that. You know what they're thinking. But at the same time, we had a number of national tenants, be it public companies or companies that were owned by private equity firms, where they were still open. They were still operating. Now, of course, sales are down.
Right.
They're still operating. And I think a lot of them were, at least in our experience, sending out blanket letters, communications to landlords across North America, really, with pretty strong terms of what they were looking for. And ultimately, they were trying you on for size. You send a letter out to 500 landlords and 10, 15, 20 of them agree, you're in a better position than you were yesterday. But at the same time, from our perspective, we're certainly trying to dial down, okay, who actually needs this relief, and doing the best we can to, first and foremost, support the independent, smaller mom and pop retailers, or those that truly need it. But
Right.
you know, I think we did have a number reach out that didn't necessarily require it at the time.
Gabe, just to give our viewers a bit of context, can you just give a description of the types of commercial properties that you guys own and the markets that they're in?
Absolutely. So they're all located in Southern Ontario, secondary, tertiary markets in Barrie, Cambridge, Kitchener-Waterloo area, as well as Sarnia, which is a bit further. And they're all shopping centers, strip centers. So no indoor mall, no urban retail, basically neighborhood strip shopping centers, sort of in that 50,000 to 200,000 square foot range.
Right.
So we, you know, big box tenants, but much smaller independent retailers in that sort of typical 1,200 square foot size as well.
Right. And what sort of, like, how are you renegotiating these? You know, you mentioned a rent deferral. Are they all deferrals, or some of them abatements, like, you know, completely erasing 50% of the rent, something like that? What sort of structure are you providing them with?
It's an excellent question. So we've truly done a mix and really tried to base it on the actual needs that the tenant requires. So again, with an independent restaurant, for example, that's not allowed to operate, they have no revenue coming in, or even like a nail salon as an example. You know, a lot of these strip centers have those types of uses. We've been able to negotiate some abatement deals in those respects. Smaller tenants that, you know, if this continues for 2 to 3 months and they're not allowed to operate, their business is very threatened and you know, may not make it out the other side. We've been able to do abatement deals in that respect. Some of the larger tenants that are operating, but their sales, you know, are taking a material hit, but at the same time they are operating, or they're able to do curbside. Those are the situations where we're trying to opt for some deferrals. And in all cases, and the deferral, you know, that can mean many different things, but in terms of, you know, the amortization period, also having some leeway to negotiate that. Most of our deferrals have been in that 12-month range. Certain tenants where they have, say, 16 months left on the lease, as an example, left on their term, you know, we've been able to extend it to the end of their term, or in some cases go a little bit beyond that. So, you know, I think there's a lot been said where, you know, these landlords are offering deferrals, but aren't you just saddling a lot of these tenants with debt? And, you know, I think in some cases where it's truly a cash flow issue and not necessarily, you know, you're making nothing, if you can spread out the AM period a little bit longer, in some cases it's not quite as onerous as the public may view it. You know, it's perhaps easy for me to say, but, you know, between adding $100, $150, $200 over, you know, a 12-month or 18-month period is something that a lot of businesses can, in fact, manage if they're operating. If they're not, then that's where we, you know, sort of turn to the abatements.
Are you receiving any benefits from any of your lenders, like in terms of, like, you know, deferral of mortgage payments or anything along those lines?
So we've looked into that. In theory, we could just on the mortgage side, but you really have to demonstrate that you can't make your mortgage payments and make your obligations. And the way that we're structured, you know, it's a bit of a tough sell for us in a lot of cases that we can, whether it's through other entities, you know, other companies under our banner that we are able to make those payments.
You guys probably also have a very low loan to value across your entire portfolio, right, Gabe? So you guys are in a great position to weather the storm.
To be frank, we're a very conservative company. We've been operating since the early 50s, so we are fairly low levered, across the portfolio. So we're in a, you know, pretty well capitalized to get through this scenario. And for those reasons, I mean, it all depends on which center, but, you know, we have some obligations on some properties, but even in those scenarios, it's difficult to prove that, you know, you can't actually make those payments through other entities. So it becomes a little challenging, unfortunately. And realty taxes side, every municipality is a little bit different. And there's been a number of, whether it's, waiving penalties and interest charges or, pushing back certain payment deadlines. But we just found that we're sort of just pushing the problem back, and the fact that we can pay, let's try to do that. And that's sort of our theory across the board. We don't want to exasperate the issue or compound it by having companies or whatever. And I'm not even talking landlord tenant necessarily, but if you can pay, you should truly try to pay, so that bills or otherwise, so that those that actually require that relief can get it. So just in terms of realty taxes, whatever it is, we can make these payments, and we're going to continue to make them unless something truly does creep up on us. But yeah.
And do you have any tenants taking advantage of that federal program? I believe that's used to pay up to like 75% of their rent payments or something like that.
So that was kind of interesting. The only kind of, I wouldn't say issue, because I think there's a lot of good and a lot of mutual benefit that can come out of it. The timing was a little bit tricky for us because, we made a whole lot of deals in the middle of March in advance of April 1st. So the timing of this program, where we had these, several of these amending agreements in place to cover April, May, and June, and you have this new program that comes out in May, everyone's kind of looking at it and saying, tenants and landlord, hey, can we actually use this now? How does this impact the deals we've already made?
Right.
As an example, but currently you can't actually apply yet. So a lot of the, sort of the minute details are a little bit unknown right now. CMHC, the application's not available yet. They're still working through some of the details, but I think, we have some particular cases where we have offered abatement where this program would be excellent for both landlord and tenant. And we're hoping that, we qualify and the tenant qualifies and we can have it work. But then there are, some other scenarios where, we'd like our current agreement to stand as well.
And
yeah.
Oh, sorry, Gabe, just to interrupt, I just want to give a little background context. So this program, I find it interesting because landlords actually have to apply. How I understand it, like you have to apply and then reduce your asking rent by 75%, something like that, and then that becomes forgivable. I'm describing it badly. Can you kind of elaborate on how the program actually works?
Yeah, absolutely. You basically have that right. So there's not an obligation for a landlord to apply. Some of the criteria in terms of the tenant, you basically have to prove that you have to prove that you've had at least a 70% decline in pre-COVID revenues, either by comparing April 2020 to April 2019, May 2020 to May 2019. If you're a new retailer, I believe there's criteria in place. You actually compare it to the last 3 months average rents or so pre-COVID, something like that. I don't know the exact answer there. And then there's some other criteria as well. So, at the ultimate parent level, the tenant doesn't generate more than 20 million in gross revenue. And the tenant has to have no more than 50,000 in gross monthly rent, which is a pretty large rent. I mean, I think a lot of these smaller retailers would certainly qualify, but the provision in terms of the revenues becomes pretty interesting because, especially in a franchisee franchise model where, you might have a lease with a head lease with at the corporate level. Sometimes you actually have it on the franchise level. So the franchisee is struggling. Maybe they own one particular store or a couple stores. But because at the ultimate parent level, they're generating more than 20 million in revenue, they won't actually qualify. And so it really sort of depends on what the structure is there and how the franchisor is helping out the franchisee. We've seen some cases where the franchisee, wants to apply to this program and the advice they're getting from corporate is that you don't qualify, because of how their franchise agreements work, which becomes pretty difficult. with restaurants, as you would imagine, who are, particularly hard hit. So I think this program has the potential to work out well. I think there's certain areas where it could probably be expanded, or there just simply needs to be a little bit more clarity, just because of the complexity of commercial leases, where there's just a lot of questions. But yeah, I think a lot of the people in our position, landlords, tenants, are pretty eager for this application to be finalized, just so you can really dive in and see if it's something that would actually work in your regard. But we would hope to offer it to a few tenants for sure, where it makes sense.
Right. And then the tenants also have the option of using that CEBA, federal loan, which I think is $40,000, and a quarter of that is forgivable, something like that, right?
Exactly. If you pay it back by December of 2021, then you only have to pay back 30. So you're off the hook of that 25%.
It's not a perfect system because, like if you talk to a small business owner and say, hey, here's $40,000 to go into debt, it's not always, that's not always ideal. But hopefully that, along with this other program, can actually help bridge the gap to the other side. One last bit on kind of the restructuring of these leases. Have you ever seen an opportunity in your portfolio or among your peers where they're kind of using it as an opportunity to restructure it as a benefit to the landlord, wherein the tenant's saying, hey, I need a 50% rent abatement for 3 months, and you say, okay, great, but you're a national tenant. Let's extend for another 6 months at the end. Let's extend for another 6 years at the end. Let's add a development clause where we could knock down the building if we want to build something. Is there anything like that or not?
We've seen it a little bit. We had a couple of those discussions, and to be honest, just on the parameters, we were pretty far off. I mean, I think there's a few tenants where national tenants that said, we'd like 2 to 3 months abatement, but we'd like to tack that term on to the end. And just the way a lot of these deal structures, the way are structured, and how long term they are, it just we didn't feel like we were quite aligned in that regard. So, that truly is just an abatement. So if you're healthy enough at that point, say 2, 3, 4 years from now, that you want to tack on a couple months, you're probably going to tack on the 5-year option anyway.
Right.
And so does that make sense? So from our perspective, we said, we'd like you to exercise a 5-year option, and then we'll certainly entertain that 2 to 3 month abatement in certain scenarios. And we couldn't quite line up. So we didn't execute anything like that. We had some early discussions and just sort of felt that trying to go as short term as possible made a lot of sense. I'm not saying necessarily month by month, but trying to stick to sort of 60 to 90 days out in terms of decision making, just so nobody was sort of committing too far. So we had some discussions. They didn't quite lead anywhere, but yeah, there were some conversations there.
Interesting. And sorry, one last question on that.
No, please.
Do they, I know a lot of leases have this clause where, if a tenant defaults on their lease, then they lose their option to renew, and, they might have 2 options of 5 years that they can execute, and that potentially could be erased. Did you see any of that happening, or was it more, you didn't formally write to them and say, hey, you're in default, and I mean, that's a tough question to answer, but what are you seeing on that note?
So I think it's one of these things. Hey, you really have to understand this. These deals, obviously, there's a very explicit situation happening, but at the same time, you have to truly think about them and analyze them in the context of the broader market. Your leverage, a tenant's leverage, an example, and so in certain scenarios, if you want to go down that road to providing default notices or calling in a bailiff to lock out a tenant or to seize goods, are you able to fill that spot? What is your timeline for filling that spot? You're having to pay commissions. costs associated with demolition, getting the space ready, tenant inducement packages. It's, it's pretty expensive to bring in a tenant on the best of days, let alone when it, may be a slower turnaround. So we're trying to evaluate any scenario with all of that in mind. And so, we didn't quite, we were very close to serving a couple default notices in certain scenarios where we felt that the tenant, certainly had an obligation to pay, and because they were operating, that they should be paying. It didn't quite get to that stage, but we're close to having those conversations and serving notice. But we were able to in the end come up with some agreements that worked for everybody, fortunately. But I think, in certain scenarios, again, like we're operating in some secondary markets, et cetera. I think in some scenarios, especially if, you sort of reading the news and you hear about tenants getting locked out in Toronto, or, some of the more high profile stuff that has made the news. I think there's always more than meets the eye. I mean, I know a lot of these publications like to jump all over a landlord, but I would imagine there's a little bit more to it in certain scenarios. But it also kind of depends. Or how are they as a tenant in the best of times? Are they making their rent? If they're significantly below market, or they're just sort of a delinquent operator, perhaps you're not as inclined to make these types of deals, or you sort of stick to the contract that you have in place and you exercise all your rights. And I understand those situations too. For us, we sort of see it, I mean, first and foremost, it's an opportunity to help out smaller tenants that can use the assistance, use the relief. But from a defensive standpoint or competition standpoint, if we're in a situation where we're well capitalized and we have the ability to help fund a tenant to get through this, that helps us. That's an asset. We want to use that to our advantage, that 6 months from now, or sort of coming into the new year, hopefully we have a full center. We're ready to go. We have healthy tenants, and we can make it through the other side. So we saw it as an opportunity as well, not just to help tenants, which certainly it is, but also to, for us to spend some money in the form of abatements to actually keep our center full and operating, and keep everybody happy.
I'm just thinking about what other things we want to cover in this podcast. What do you think?
That's a good question. I mean, I was going to mention maybe something. I sort of talked about it a little bit, just in terms of like truth be told. I don't want to go into too much detail, but we found a lot of the public companies or the private equity firms out of the States took a very different approach than some Canadian companies. And it sort of goes in line. I have a number of friends that work in private equity down south, and they're taking a very, very, very hard line approach. Whether it's based on what their exit strategies are, just how, their capital structure, whatever, their obligations, whatever they need, they are taking a much harder approach.
Like no negotiations at all, pay your rent or get out.
Yeah. I mean, like from a tenant perspective, like where they're basically saying like, just like no communication, not responding, not even like, there's been some scenarios where they basically served these blanket letters, and we said, I'm looking to have that conversation and say, okay, what can we do? No responses, like nothing until sort of towards the last week of April, where they reached out a little bit, and and that you're 4 weeks in default of your lease, and just taking a very different approach to the strategy, where you want this to be unemotional, but at the same time, where if you have a tenant that reaches out in the middle of March who's thinking 3 weeks ahead, you're going to be more inclined to deal with them. I mean, that's just the fact of the matter. You have a little more runway. You're going to work with them. You understand you have time in place, and there's less surprises. You can budget accordingly. When you have these tenants that are refusing to speak to you and not actually, have that conversation, it becomes very difficult, when the time comes to make these deals and say, still be inclined. I know, we're going to our are bored and saying, we got in touch, we want to do these deals, and they say they haven't paid rent in 3 or 4 weeks. What are we supposed to do here? Do you want to, sort of, offer what they're asking, or at the same time, are you saying, hey, why, where have you been the last little bit? So I think you want to strip out the emotion as much as possible. But at the end of the day, a lot of these companies approach things very differently. And those that approach things in advance of the first of the month and were willing to negotiate and are being open and honest about their situation, I think in a lot of cases, you're a lot more inclined to try to provide that relief and, have that understanding of their business, as opposed to those that took a more hardline approach. And then you're kind of saying, we've already budgeted for this.
Right.
It's very difficult. So
it's all, yeah, that's a really interesting point. And I mean, even in thinking about the US, they have much more commercial property per person, right? They're just dominated by those retailers and malls and everything like that. So Gabe, is there anything, thank you so much for doing this. Is there anything that we can direct our audience toward? Is there anything, do you want them to be sending you multifamily property? Is there anything that they should be looking at for what Well-Grounded Real Estate is doing or working on?
So this the shameless plug
of course.
Portion. If anybody's looking for commercial space in Barrie, hit me up. But no, I think we are looking for opportunities. We are trying to underwrite as much as we can. We're in a position that we hope to place some capital. So if there are any opportunities in the multifamily or retail space over the next few months, we'd love to be in contact. So our contact information, Well-Grounded Real Estate, Gabriel at Well-Grounded Real Estate. Feel free to send us some stuff, and we'd love to have those conversations and be in touch and sort of increase our deal flow a little bit over the next few months. There's only one more thing. I mean, this is completely where you want to go with the podcast, but we actually did a couple new retail deals in the past little bit. So I don't know if that's of interest or you want to
leases?
New leases. Yeah.
Okay.
So we're sort of, certainly trying to get the deck in order. That was sort of the most part over the last couple months.
Okay.
But we also
let's touch on that. Let's touch on that quickly. What sort of lease? What did that involve? Like, do you guys now have a pandemic clause that they're paying you? Just are there any extra provisions in the lease or anything like that?
So we were in the process actually of negotiating with a national restaurant tenant for a pad site, and we were in and around February, March, like very, very close to putting pen to paper. Had been negotiating for almost 12 months to that point. So quite a long time and finalizing everything. And then once the pandemic hit, certainly they had to manage the rest of their portfolio and make sure that they supported all their franchisees, et cetera. And so it forced us to add a couple clauses into our appendix in our lease, which dealt with a number of scenarios. Not just, first and foremost, the municipality was not accepting building permits. So how do we adjust, certain fixturing dates, commencement dates to address that? Once you get past the building permit issue, are you even allowed to actually build out the commercial space, given that the use isn't an essential service? Right now, they're not allowed to build it out. So suppose you get your building permit, if the municipality is still reviewing that, but then you can't actually build out the space. And so we had provisions in place for that. Now, suppose you could actually do both of those. You get your building permit, you build it out. If this all takes place in the next 4 months, nobody knows the answer to this, but will that restaurant be allowed to operate at the end of this? And so we had to add several clauses in there just to allow to adjust the dates accordingly. And we even built in sort of the deferral or certain abatement clauses into that, just so there'd be no surprises. So in 8 months, if this is where we are, here's exactly what will happen. At that time. And then it gets a little more complicated because suppose you can do drive through and or takeout, but you can't do dine in, at that stage. And, how does that impact everything? So, with this particular lease that we were negotiating right in the middle of the pandemic, we added those clauses, but I think it's pretty safe to say that's probably going to become a part of our standard form lease moving forward.
Awesome. Okay. Well, thank you so much. Garrett, did you have any other questions that you wanted to ask Gabe?
No, I'm good. Thank you very much for being on the show, Gabe.
Yeah.
No, absolutely, guys. Thanks for having me. Dame, I know you talk with Jonathan a little more over the last couple months, certainly, but yeah, really, really appreciate you guys thinking of us. It's been a hell of the past 2 months.
Yeah.
It's pretty unbelievable.